Thank you, Sam, for joining me today. It's definitely something that we both planned for a while. And let's begin straightforward into the conversation about the new program that I was super excited to hear about myself. So remember, if Olga doesn't think she knows too much about the subject, she would not bring it to the podcast. I want you to dive very deep into everything the program has to offer. I really would like to hear absolutely every single benefit the potential clients could understand in details. What SONYMA program is, what is it designed for, who can benefit and use it, why people would borrow and really apply and to qualify. Let's dive in.
Nice. Thanks for having me, Olga. Appreciate it. So it's a great program, right? In today's world, money is tight, inflation is high, right? People are worried about money. This program is awesome for a first-time home buyer because it allows them to get money back at closing that they can use for parts of the transaction of the real estate process, and it also gives them a better rate than what the market's at.
So wait, I could apply and I could get money back to pay for my closing?
Right. Right. So basically, the program is called, it's a Sony, the name of the program is SONYMA. It stands for State of New York Mortgage Association. It's a New York State program. So it's all safe. It's backed by New York State. It's a bond loan program. This program basically lets the person get 3% back of the purchase price. So
Wow.
up to a certain amount. Now you have to fit into a certain bucket in terms of income and the price of the property. But if you fit those two buckets, you're good to go. You fall into this program. So let's say you're buying a house for $500,000, they'll get 3% back or up to $15,000 back in cash that you can use for closing costs. You could buy the rate down even more. You could use it for a whole bunch of different options.
Wow, this is amazing. Sam, what
Right.
do I do to qualify? What do I do to apply? What's the income requirement?
So the income requirement is 136. Now it depends on how many people are in your household. $136,000 is the income limit for 1 to 2 people. So if there's a gross household income of that or less, you can fit into this program.
So $136,000 the household income.
Is the household income. Yep. Now, if you add a child into that, or let's say a grandmother that's going to be living with you, that goes up to around 160.
Wow.
Right. Which
It's
is
a-
pretty good for New York State. That's a lot of money.
So what's the catch, Sam? What's the catch to apply to get the money? And I know that in the end of the day, it's always the catch. Let's talk about, is there restrictions on the timeline that you have to stay in the house or an apartment to qualify? Do I have to pay anything back if I decide to sell it prior to restricted requirements?
There is a timeline. You have to stay in the house for 10 years. That's what the program states, right? So if you buy the home, you have to live in it for 10 years. It's got to be your primary residence for 10 years. So there is a stipulation there. But I look at it this way, right? Even if you stayed in the house for 5 years and you had to pay back half of the money you got back, you still got half of that money back.
Interesting.
You still got half of that money for free,
Correct.
right? So it's a win-win,
Correct.
at
Correct.
the end of
Correct.
the day.
Well, can you go over in details what exactly people need to do to qualify? Like, is there restrictions on, let's say, besides the income, like the credit?
Yeah, this program is great because unlike a conventional loan where if your credit's really low, the interest rate will be higher. This program, if you have a 620 credit score or an 800, the rate is the same.
Wow.
That's why they do things like this, like this in this program, because basically they want to entice first-time home buyers. Maybe you have you have a couple blemishes on your credit. Maybe it's not the strongest, or you don't have, you have a little bit of debt on there. This program is to help you get into a home. That's the goal of the program, in my opinion. I can't speak for them, but my opinion is they want to get people in homes.
Beautiful. Well, tell me, is there any kind of restrictions on what you can buy?
There is. So you could buy a single family, a 2-family, a 3-family, and a 4-family. Generally speaking, anything over a 4-family becomes commercial. So in the residential world of mortgages, anything up to 4-family would essentially be what would fit into this program.
What about co-ops and condos?
Co-ops and condos are great. I'm glad you brought that up because co-ops are awesome, right? So I don't know if everybody knows this or not, but when you buy a co-op, the closing costs are significantly less than a single-family home. So essentially, if you're getting $10,000 back and your co-op closing costs are, let's say, around $4,500 to $5,000, you're using that money to cover your closing costs entirely, and then you can walk away with some cash or even put it toward the down payment
Or buy down points?
or buy down the rate even further. Which brings me to my next point. The interest rates on this program are so good that they're basically a point below where the market is right now. So if let's just say rates are touching 7%, the starting rate on this program with the down payment assistance is 6.25.
Wow.
So they're almost a point better.
Wow. So when you buy down the points, how much towards the points you can use the money that is left over?
So you can buy it down half a point. So
Hmm.
technically, if you're at 6.25, you could probably get that down to somewhere, depending how much money you use to buy it down, you can get it somewhere into like the high fives right now, which is kind of pretty unheard of for rates being almost 7% right now.
And are you required to put a certain down payment to qualify for the program?
You can go down to 3%.
Wow.
So you can go as low as 3%, but as me and you both know, we do co-ops. 20% is usually what they probably require. So depending on where you're buying.
Wow. Interesting. So technically, the program could be used. Let's recap. So you could apply for this SONYMA program as a first-time home buyer. It's ideal for someone who can actually buy for the first time, as long as they have up to $136,000 in household income.
Right.
If you have another child or a grandparent or a mother living with you, it could go up to $160,000.
Correct. Yep.
And then you need to have a credit. What's the cap of a credit?
The lowest credit score I think they'll go down to is around the 600s.
Mhm.
So that's pretty low. I mean, you don't want to be lower than that. But if you are, this program will work for you.
So this program looks like it could be ideal for my first-time home buyers to all my co-ops.
Yeah, definitely. And that's the beauty of the program, right? I love it for co-ops too, because usually who's buying a co-op?
Starter.
It's a starter home, right? It's a great entry point into home ownership. It's low maintenance. You don't have to go out there and shovel your snow, replace your hot water heater. This program is for, in my opinion, it's great for a co-op or a condo because most people that are buying those things, they're first-time home buyers. They're buying co-ops. So it's a good program for them.
Beautiful, beautiful. Now, Sam, how do you sell this program, or how do you convince buyers that they need to buy into this program?
It really depends on, someone's financial situation, right? If someone tells me they're gonna, and when we talk to clients, we're looking at the whole picture. So part of our job, and I'm sure you do this from a real estate perspective, in terms of selling and buying, we're asking a lot of questions, right? So when someone comes to us and they call us, we ask them so many questions that at the end of it, they're like, are you guys like interrogating me? Are you the FBI? Like,
Yeah.
how many questions are you asking me?
Yes.
So, and I always tell my clients, we're asking these questions because the job of a loan officer is to be able to find where you fit, right? To kind of, oh, it doesn't work here, but it works here. It doesn't work here, but it works here. So that's kind of our goal and our job. So with this program, we're always trying to find a way to fit people into it. Now, if you don't fit and you make more money than the income limit, we can't help you there. If you're buying a property that's over $806,000, we really can't fit you into it. But if you told me that you were going to buy a co-op or a condo and you're going to stay there for a decent amount of time, I think this is the program for that person. If someone tells me they're selling their co-op in 2 years, probably not worth going through this process, but it could be beneficial still. So it really depends.
Beautiful. So it sounds like this is a perfect program for a lot of people that are starting off.
Yep.
And it's definitely a great support system from New York State.
Yep. It's only for New York State. Yep.
Okay. So technically, it's only open to New York residents.
Yep. Correct.
And every single one that has a job, that
Yep.
has a stable income, that has a down payment, has decent credit, and ready, willing, and able to join forces and call themselves a homeowner, they can definitely call you, and they could definitely apply for this program and qualify to make sure that they could start off to become a homeowners in New York City.
Yeah. Yeah. Definitely.
Absolutely.
And when I talk to clients too, the number one problem we run into is they have their work history, they have a good job, they have stable income. But we all know this. It's hard to get ahead in New York, right? It's hard to save money. We have bills, we have car insurance, we have our car payments. The number one thing that people don't have is the down payment.
Correct.
So right off the bat, this program is helping you with that 3% that you're getting back.
Beautiful.
So that's the number one thing. And that's kind of why we always say, the first question we'll ask is those two things. What is your income? What are you looking to buy? And then from there, we kind of take you down that path and see where we can place you.
So technically, when they walk into your door, there will be no excuses, but to help them find a way
Yeah.
to become a homeowner in New York City.
Yeah, exactly. I mean, that's our goal, right? As a loan officer, someone that's talking about financials with you, going over all the details. Our goal is how can we make this work, And I think I've told you this before. We're a bank and we can broker loans out, right? So if we need to take a loan somewhere else to make it work for that person, our goal is to get them in a home. However, we have to do that.
Absolutely. Well, thank you, Sam. This is a great information on SONYMA program. Anyone who is interested, please reach out to Sam. He's very easily approachable, and we will definitely list his phone number below. Please follow, call, and reach out and see if you can qualify. Thank you very much.
Thanks, Olga.